Stick towards the end of today's video if you want to figure out how I was able to catch 10 risk reward and how you can do the same trading actually during the ADA session on indices, which a lot of people don't promote. I personally say try to stay away from it as much as you can, but when conditions are right or when drawing liquidity is very clear, I'm taking advantage. So let's jump straight into today's recap here, going over these 3 trades taken. All right, so if we go back in time real quick in replay mode, this is what I was seeing at the time. We have the origin marked here, and ADA session started here. So this is when I was looking for setups here. And I'm talking about ADA kill zone, by the way. Whenever I say ADA session, I'm talking about kill zone. I like to trade within the kill zones. It gives me the most amount of liquidity to trade with and volume as well as volatility. So here is the structure, basically what it looks like on the higher time frame here. We have this break from the left, as you see, and we also have another extra break here. All right, so we have 2 breaks so far to the upside, something you want to be careful with, obviously. But I see we are in high time frame demand. So if I mark out demand, let me just hide my indicator so it doesn't block anything. Visually, you see, just switch time frames, 1 hour, 4 hour, 30 minute. I don't see anything here. Let's keep going down. There's actually something, sorry, on the 30 minute here. This is 30 minute demand, but let's look at the 50%. It is within discount, but you can see it doesn't look as good because it is taking up very close to 50%. Let's jump to lower time and see if we can refine this. On the 50 minute, no refinement. See anything on the 5 minute? There is refinement on the 5 minute. As you can see, this 30 minute actually got mitigated here. Let me see, did it? Yeah, it got mitigated earlier. So no longer valid in terms of 30 minute PY. You want to look for different PYs that are unmitigated in this case. We had a reaction off the 30 minute. If you took advantage, again, this is literally at market closure basically. So no one's really trading this anyway. Let's go to the 5 minute. And you can see there is a PY on the 5 minute. So let's get rid of the 30 minute. Just keep in mind now that 30 minute got mitigated, but this is the 30 minute as a whole. So we're still in high time frame demand. This is the low that really made this new high. Hence, we're expecting us to continue higher from this point. But I'll tell you why I actually made a mistake today. Not today, on October 6th, yesterday actually, trading this. This is the origin on the 5 minute. So then I went to 1 minute, see if there's anything else I need to look at. Both of these are fine. You can mark the origin here on the 5 minute or 1 minute. Both are literally, doesn't make a difference here. So if you want to wait for an internal sweep, you don't take this initial setup here. Or if you did want to, you take the scalp here for 1-to-1, you hit TP, you wait for this internal sweep otherwise. And then you can see I took a -1 here because the market for me, if I turn on the indicator, kill zone opened up around 8 right here. So I was on the charts roughly around here and I saw that we had our first internal sweep here on the high time frame demand. So I was like, okay, I just obviously everyone knows if you've been trading, indices are having bullish for quite some time now. And so I'm obviously leaning towards buying NQ. So I took a -1 here and I realized after this failed, we failed once here and we failed twice. Usually my typical rule is if we fail twice within the same PY, I'm going to be looking for another PY to trade off of. So when I look to the left here, I saw there's nothing left unmitigated. This is all fully mitigated. There's no more gaps. This was the last unmitigated PY. There's nothing else here. Now, what tends to sometimes happen is SMT in terms of mitigations. What I mean by this is, if you look carefully, again, you got to study the charts. This is things that I learn and see from experience. I know why the market does this now. Sometimes you'll see on the other opposing correlated pair asset, if you're trading indices as NQ and ES mainly, ES might have something unmitigated right below here. And so this mitigated that, and this both maybe potentially mitigated that unmitigated PY on ES. That's why, hence, there's nothing here on NQ. There was something there on ES, and because these two assets are positively correlated, if ES is going to go up, 89% times NQ is going to be going up. There are a few times, or a few days I've seen where they actually move opposite, but that's pretty rare. Usually they tend to be somewhat synchronized. Not perfectly, nothing's perfect, but they tend to. And so this is when I made a mistake because I saw we failed twice. I respected my rule there. I was very confident actually in this short here. I was looking for a stop hunter to take us lower. So we had made this low here. Again, this pullback to me here personally is way too tiny. This is the more prevalent high here internally for me. Same with this here. Right, I'm not going to be marking this high pullback here. This also high did not even make a new internal low. So I'm marking this high here. I wait for the sweep. I enter on candle closure here, as you can see. You can wait for reaction if you want, but usually I notice you do get swept if you're taking like an OB entry model after it. stop hunter because this tends to happen. Another sweep. So entering body closure or candle closure. Stop. I am protecting the PY here just because it's so close. It might get mitigated here. I was thinking this might be just a normal setup with inducement and mitigation to go lower. So I covered the PY, and my mistake here, I guess, really was not breaking even. I definitely could have broke even here because price did indeed mitigate the final PY here in a sense, the OB here, the extreme OB, and my entry was up here, and I had an OB here protecting me. So if price wanted to go lower, it could mitigate this and then go lower because I saw this was an internal sweep. So we swept this, and you see how, why do I take this small little pullback here as internal sweep compared to this? Well, because of how smaller and tighter this range is here. Very, very tiny, right? It's a little different than here. So this is internal here. This is an extreme point, obviously. And so if we reswept this, price makes a new low. This is one of my continuation models to talk about within the course, so you guys should know. But essentially, we should not be sweeping this high again. Once it's swept and makes that new low, if we want to go lower, we mitigate this and go lower. It usually does not sweep twice. I say usually because there are times where highs and lows get swept twice. Like for example, once, two. But usually it does not. It's very, very unlikely. So I didn't go break even here, and it hit me, right? It hit me out, stop loss. Now, another reason why I didn't go break even despite knowing all this is emotions. And just tell you guys, no one's perfect. I'm not perfect. I've been trading for several years and I'm still not perfect. You don't have to be perfect in a market. That's the thing. As long as you can stick to your strategy, I'd say 80 to 9% of the times with discipline, like 80 to 9% of trades, if they're taken properly with a strategy, you should be fine. If you're only being disciplined 50% of times, that's gonna negatively affect your strategy. You're probably not gonna be profitable. But if you're like 89% discipline on your trades, majority of your trades are taking with the system, maybe like 10% are some errors or random trades. Depending on if you're oversized or not, that can also affect the numbers. But with consistent risk management, you should be okay with taking like 10% random trades. Not saying you should be, but that just tends to happen over time due to human error and emotions. So because I was so confident in this draw here near session low, I held on to this trade, thinking maybe we sweep and go lower. And we did. Cool. We got some nice reaction here on the seconds. And then once I realized this, so I'll show you guys on the seconds. Once I realized we made this OB, we held it actually, made equal highs, we held, we were going lower. Once we took this out here, I was like, okay, maybe I should just close this manually for minus 0.5 R. But my emotions kept getting to me. I was thinking, you know what? Look, we still have not mitigated this 1 minute. Maybe we come up and mitigate the 1 minute. But, as you see, as soon as we mitigate the 1 minute, I got hit out, stop loss. So, yeah, my bias was just wrong here. That's okay. Now, let's keep playing the market. Now, once my bias failed, and I realized this high that made this low, this is also this high. So this stop hunter failed. Number one, stop hunter failed. Number two, this held. The initial OB entry held, even though we swept more than the typical times that we usually sweep. Right? Usually it's 2 tries for me. This is 1, 2, 3 tries. It is what it is. Got taken out. I was looking too long now because I flipped my bias. So my bias initially was correct. And I flipped it because of failing twice, and now I'm flipping it once again because stop hunter failed. This, if price wanted to go lower, it definitely almost 100% should have went. I'm not saying 100% actually, maybe like 80%. It should have gone lower from here. The only other way for price to go lower is maybe this. Take out this, or even take out these two, come up here, mitigate this, and go lower. However, at this point, I was just very iffy on shorting, especially this low in the leg, knowing that we've held the stop hunter, the initial OB here. So this is when I flip my bias, because going to the 30 minute, we're still bullish, right? We're still in this demand. I saw this massive gap. Everyone that trades fair value gaps, you're doomed because you're probably shorting this gap. So when price comes up here, you're probably trying to short this. It almost never works. All right. Same with this. There's a bullish gap here. People are probably buying this. And the point is, I don't short this until price mitigates here at least. And even then, this is low probability because we're bullish. So because I was bullish here and we had a massive imbalance to fill to the upside, a lot of people are trading this imbalance, but I'm filling this imbalance. Let me hide the indicator real quick so you don't have to see too many zones on my screen. I was looking and waiting for a way to continue the trade. And so I found this. I should have used a limit order here, now looking back in time, because this is basically a smaller range here. But essentially, we mitigated this. We actually took out this high. As you can see, we took out this high. So if you go, I think it was the 15-minute or 5-minute. Let's see. 5-minute looks more clear. This is basically where you can confirm your change in character. All right. You can even count this technically again, but this again is not as prevalent as this. So it really depends on which high you want to take. But the fact that we broke above both signifies me even more probability that we're going to be going higher. Again, when in doubt, stick with the trend. So made this change of character, came back, and I was waiting for an entry model basically to go to the upside. My OB continuation model. Found an inducement here. All right, inducement here. Again, stop hunters here. However, this range is very small, so you want to be careful with stop hunters when the range is small, like something like this. You want to be very careful. So you could have stopped under here if you want to, but I personally was waiting for more confirmation. If you're taking a stop under and waiting for confirmation, you wouldn't have taken a loss here. You would have just entered down here essentially. Since this is where you get confirmation from, IFG plus OB, this is very high probability trading. Here's your inducement. Here's your 50% tool in this case. Again, trillion inducement, and boom. There's a 10 risk reward. I took the OB entry model here. You could have definitely taken the IFG here as well. It's up to you, but I should have taken just the limit order here. This would have been completely fine too. And that's how the trade played out here. Now, where's my target? I had the exact same target as I did previously, right here. This fill right here. This mitigation was my target because at the time I saw this as inducement. So this is inducement for this. However, because my bias is now bullish, because we're in high time frame demand, I don't care about this PY anymore. Like, I'm not trading a reversal off here. If I'm not trading a reversal off here, I know people are gonna short this. I'm just running them out. So I just hold towards basically right above this. Because since this is taking out two highs, you probably get an even bigger reaction if you were to try short. So let's see what happens here though with the trade. But this is basically 10 risk reward here. I think this is something to take about 2 hours, right? Again, keep in mind, I'm not staring at the chart for 2 hours here. Go do something with your life, all right? Whether it's something else, a hobby or whatever. Go do something else with your time. So that's basically where my TP was. Now, you could also TP the 30-minute above if you want to. As you see, which ultimately got to the 30-minute. In this case, I didn't fully capitalize on entire trade, but I think I capitalized on a good amount, right? Almost 75%. My goal usually is to capture at least 75%, but this is close enough to that. And yeah, that's basically for the trade recap. So you guys did learn a lot from today on when to flip your bias and when to flip it back again. I don't usually talk about flipping it twice. Most times I'll flip once, but this situation where you put the context clues together, let the market tell you what it's gonna do, depending on the, again, failures of trades, mitigations, structure, and that's how you flip your bias. So I hope you guys do take away a lot of nuggets from today's video. If you guys did enjoy, make sure to subscribe, leave a like, comment down below, and I'll catch y'all in the next trade recap. Peace.